Hi there, Nicholas. Thanks very much for joining me. Fantastic opportunity to speak to you about the Japanese share market. JPMorgan Japanese Investment Trust is obviously one of our favourite ways to get an exposure to Japanese equities. So I'm really looking forward to our chat. Thanks for making the time.
Yeah, great to be here. Thank you.
I thought I'd just start cutting to the chase, really. The Japanese market has actually been performing very well this year, hasn't it? It's been outpacing the US, the UK, and even Europe, which has also been one of the better performers this year. So what do you put that strength down to, and how are you feeling at the moment about the outlook for the Japanese market?
Yeah, I think it all comes down to really one simple reason, which is that there is a corporate governance revolution happening in Japan right now. It's something that's been happening for a few years. Started in 2014 with a corporate governance code and stewardship code, and the momentum's been picking up. But in the last 6 months, it's really taken off. That is really the whole story behind it. The most recent thing that's happened is that the Tokyo Stock Exchange has said that any company trading on a valuation of less than 1 times price to book needs to make a plan and explain what they're going to do about it. Now in Japan, 50% of companies trade on those very low valuations. We've started to see big plans, buybacks, dividend hikes. There's very inefficient balance sheets here. So we've got this domestic pressure now combining with what we already have quite a lot of activist funds in this market. So this is a very big catalyst. And at the same time, you might be aware that Warren Buffett was recently in Tokyo. Japan is now the second biggest area for investments for Warren Buffett and Berkshire Hathaway outside of the US. So you have these things coming together, and it's a very, very powerful combination. I think most importantly for the viewers, still at a relatively early stage and still really not that well recognized. And there can be a lot more, because if you look at Japanese companies, 50% of them have a net cash position. So there's so much more they can do in terms of balance sheet efficiency. If you looked in the US or Europe, you'd be looking around 15% with net cash positions. So it's a really exciting time in the Japanese market at the moment.
Yeah, really interesting stats, and also equally interesting to hear about Buffett and Berkshire Hathaway's interest in the region. Can we just touch on the Japanese economy at the moment, and how are you seeing the backdrop there, and where is the economy headed over the coming 12 months? Because I think in many ways, like the share market, the economy has probably held up a little better than some might have expected as well, hasn't it?
Yeah, well, the economy here is in a rather different place to a lot of the West. And a lot of that is because Japan, although we here in Tokyo and the rest of Japan didn't have big lockdowns like people experience, whether that be in New Zealand, Australia, the UK, US, and so on. We never had that, but there was always mask mandates. People were encouraged not to do things, even though you always could. And actually, it's only this week, so this is in the beginning of May, that the full mask mandate has been dropped here, and that COVID has finally been downgraded to the same level as flu. And when I walk around the streets here, you still see the majority of people wearing masks, and it's been much slower to recover. And so it's a very big point that we're at a very different point of the economic cycle. That's the first thing. The second thing is that up until October 2022, Japan was essentially shut to Japan, except if you were Japanese or you lived here like me. And so only in the last 6 months have foreigners been able to come in. So we're just really starting to see a big boom again in foreign tourism. And the one part which hasn't come back yet is Chinese tourists, because they've had their own issues with COVID in China. Well, pre-COVID, they were 1/3 of all the people that came here. So this is another big boost to the economy. And the final thing I'd say about what's going on here is that for Japanese companies, China is their biggest partner. China is Japan's biggest trading partner. And so as you get a restart in China, it has a knock-on effect to Japanese companies and the Japanese economy as well. So that's why it's really in quite a different place. And many of those topics which you see come up in the rest of the world, which are things like inflation or interest rates, we don't have the same issues that certainly Western countries do.
Right, that's really interesting. And let's touch on that point you just made about inflation. Excuse me, because that's a really, really important one, isn't it? Everywhere around the world, here in New Zealand, the US, Australia, Europe, the UK, all had exceptionally high inflation over the last little while. I know it's a big topic to sort of summarize in a couple of sentences, but why has Japan's experience been different in recent years? We know that the history with inflation in Japan, or deflation, or the risks of that, but what has been different about that post-COVID period that's made it less of an issue?
I think the main thing here is that Japan has been in deflation for so long. So we're looking at 25 years, more or less, of deflation. So it's a very difficult cycle to get out of. People always think it's always better to delay buying anything. It's going to be cheaper tomorrow, next week, next year. So it's really difficult for the economy. And so it's much harder for Japan to kind of start to get out of that. Now, we do have some inflation here. It's actually at the highest level for many years. But even with that, it's only at 4%. So it's a completely different scale to which you see elsewhere. Some of the reasons why Japanese inflation is higher, which are to do with higher commodity prices because of the war in Ukraine. Now, those have all started to come down, so that will relieve pressure on Japanese inflation. And also the yen last year was quite a weak currency, and that also has started to reverse again this year. So there's some reasons to think that that inflation here might tick down. And actually that's why you see the Japanese worker, the average wage here has not increased for 30 years. You look at the rest of the world, you've got strikes, you've got people asking for wage increases of 3, 5, 10, 15%. Like, we've just seen nothing like that here. And we've only just started here. It's a very early stage. It's exciting. It could really get the economy going here. But we're just at quite a different stage.
Mm. Well, you touched on the Bank of Japan and the loose monetary policy, and that's something that, again, is quite foreign to those of us in other parts of the world where we've seen very sharp and substantial hikes in interest rates. But it's been a long time now that the Bank of Japan has been very supportive and been looking to stimulate the economy. Do you ever see a time when they will step away from that in a big way, and would that be very difficult, or do you think these policy settings will be with us for a longer period?
Well, with the caveat that everything we do within a trust is all about the companies rather than having a big macro view, we expect that the authority will move quite slowly. Things tend to happen reasonably slowly in Japan. But it is reasonable to expect that we will go from, and at the moment we still have negative interest rates, so completely different again to the rest of the world. It's not unreasonable to think we could go to 0 interest rates. But even that is that really normal, even to be at a 0 level? So we'd expect it to move reasonably slowly, but there is some scope for them to be a bit of an adjustment. I think, though, that there's an awful lot of questions about Japanese monetary policy. It's a common question. What's happening with the currency here? That's a common question. And what's happening in the economy? You've asked me a couple of questions about that, which is perfectly reasonable. But there is no link between the economy and company earnings. If you go back for the last 12 years, the Japanese GDP growth has basically done nothing. It's completely flat. This is the world's most mature economy, but at the same time, earnings per share growth in yen terms is the same as for the S&P 500 in the US. There is no difference in the earnings growth between Japan and the US, despite the fact that the US has got more and more expensive. There's some very good companies, that's perfectly fine. But Japan has had the same level of earnings growth, yet the market has continued to come on a lower and lower valuation, despite very, very strong corporate fundamentals.
Mm. Well, just talk us through that disconnect then, because when a lot of us think of Japan, we think about some of those long-term challenges in terms of limited growth, very high government debt, demographics that maybe aren't as supportive as you might like. And then you think about that corporate earnings picture, which is obviously looking a lot better. So why is that? Is it the dominance of exporters, or is it the makeup of sectors in the market? Why the difference?
Well, firstly, there is no empirical link between GDP growth and stock market performance. There's also no link between population growth and stock market performance. If there was, then you'd see markets like Nigeria being the best performing markets in the world, and that simply doesn't happen. And some of these issues, for example, the demographics, it's not just Japan that has this issue. They have this issue in South Korea, Taiwan, China, Italy, Scandinavia. Many, many countries face a similar issue. Japan just happens to be the one that has it first. So there's no link between why any of these things should happen. So the economy and the market are completely different. And in the Japanese stock market, there are very strong companies in certain areas. And they have nothing to do with what's going on in the Japanese economy. So if you look at areas, for example, that Japan is very strong in, areas like robots or automation, here, Japan is undisputed number one. You've got more countries automating production because wages are rising. So what are we going to do about the issue? And more sectors automating. So it used to be things like the car industry, but now it'll be things like warehouses or pharmaceuticals or food. All of these areas starting to automate. And we are very fortunate that all of the global leaders in this area happen to be in Japan. Now, it doesn't make any difference at all what is going on with the Japanese economy for those companies. So if you look at another example where Japan is extremely strong, is in something like computer games. So if you take the 50 best-selling computer game franchises of all time, over 20 of them are Japanese. And you just think of things like Super Mario or Pokemon or Zelda, all of these things, they're all Japanese. And again, what's happening to earnings at companies like Nintendo, Capcom, Sony, and so on, it's nothing to do with what's going on in the economy. And that's why you see this major disconnect between the two.
Right, that's really interesting. You're busting a few myths, aren't you? Because I guess there is a natural tendency to look at an economy and think, well, if that economy doesn't stack up as much as I would like, then maybe it's in a void, but not necessarily the case, because equity markets often follow a different path. So it's great that you're pointing that out. You've touched on a few sectors that I think sound very favourable, whether it's robotics or gaming and so forth. Against the backdrop that you're seeing out there, and the way you're feeling, can you tell us about any other sectors or parts of the market that you're favouring the most at the moment? What do you like, and what is the trust most exposed to, and why?
Well, the trust itself has an unconstrained strategy, which means if we don't like something, we won't own it. And when we find areas and stocks we like, then we'll only own them. And that's a very important thing to understand about. And the other important thing is that in Japan, in total, there are roughly 4,000 listed companies. It's an incredibly rich market for finding companies and stocks to invest in. Actually, only half of them have any investment bank analyst or sell side analyst, you might call them, writing about them. So, there's a credible opportunity from us being based here on the ground in Tokyo with 25 people meeting all these companies. So that under research nature of the market throws up a lot of opportunities as well. I think another area I point to is that we find being particularly exciting is that I always like to think that there are great companies in Japan. They would be great companies anywhere in the world, and people have probably heard of them. They just don't know that they're Japanese. So to give you a couple of examples, I don't know if any of the viewers here are into cycling. If you look at gears on bicycles, and bicycles are, people having more healthy lives, people cycle more, you see more e-bikes. But if you look at the gears on bicycles, Shimano, it's a Japanese company, has over 75% market share in that market. Tremendous pricing power, excellent balance sheet, just completely dominant. So, it's the only way to get exposure to that area is to come here and invest in that type of company. Or if you look at in areas like retail, might be familiar with companies. You might be familiar with companies like Uniqlo, and Uniqlo, which the company is called. Sorry, I'm back now.
That's right. You carry on. Yep, just lost you for very briefly, but we'll carry on.
And Uniqlo, is a company which, making casual wear items, expanding all over the world. People think of it, oh, it's a Japanese company. Actually, its overseas sales are 60-70% of the total. So dramatically higher than anything to do with its home market. And even in certain niches, like in medical technology, you see companies with very, very high market shares here. Great example is a small company called Nakanishi. It makes dental hand pieces. Small company based north of Tokyo, it's the global #1 in hand pieces used by dentists, and completely dominant area. And we can find these kind of niche manufacturers. These are all beneath the radar, just not very well known companies, but incredibly strong long-term outlooks, which is what we're really trying to focus on.
Some great insights there. Shimano definitely be one that our listeners will be familiar with, but really interesting to hear of that lack of research coverage, which I suppose works in your favour because it means there's more opportunities to unearth that others maybe haven't noticed or are not sort of as obvious. On the other side of that coin, any areas that you're avoiding or that you're particularly cautious on? Are there any parts of the market that you're just completely not in?
Yes, I think that is also a very important point because we're, as I described at the beginning, we're very bullish on the market itself, but within it there are definitely winners and losers. Like you pointed out the fact that the Japanese population is going to fall, so it clearly means that demand will fall for certain companies over the long term. That's just a fact. If you look at something like retail in Japan, of course, demand is going to fall. There's going to be less people. And there's also a move to more online shopping. And in Japan, only 11% of sales are done online. That is extremely low by global standards. So we've got to watch out in that kind of sector. Another kind of standout would be in something like cars. Now, I expect people in New Zealand, if they think of Japan, they'd often think of companies like Toyota, Honda, Nissan, Mitsubishi, Subaru. Like these are classic Japanese brands. We do not own any, and that is because we have a concern that Japan is losing competitive advantage in that area. The Japanese have more or less failed so far to launch an electric vehicle. So not only are we saying they're now behind Tesla and maybe the Chinese, but they're also behind many of the European and even the American companies. So this is a big risk, and we think pretty slow there. So that's an area that we tend to avoid. And another one that we're quite cautious about and don't have any exposure is banks. Now in Japan with banks, you've got very low interest rates, so difficult to make a margin when you loan money. You've also got an aging population. Older people don't generally need to borrow money so much and very competitive. And you've also got, as I said earlier, 50% of companies with net cash. So they don't really need to borrow money either. So this is it's not just about monetary policy, but it's also what does the lending outlook look like? And it's not great. And we've got all these other great ideas. So let's just make sure that that's what we put into the trust. And we only give the holders of the trust exposed to those, and we don't have any of the other types of things that I'm talking about.
Really, really interesting insights there as well about what you don't own. That almost tells us as much as what you do own. Look, I'll just ask you one final question, Nicholas. You've talked a lot about the things you like, and I think we can make some judgments about what you're really trying to identify when you're picking stocks. And at the end of the day, even though I imagine you do have to keep an eye on the economy or what the Bank of Japan's doing, but as you alluded to earlier, you're investing in companies, and that's your core competency. So when you're thinking about structuring the portfolio in a long-term sense, what are the key attributes you're looking for? I imagine there's lots, but can you give us 2 or 3 of the most important things you look for when you're trying to identify which businesses you want to own?
Yeah, what we're really trying to do is own the very best companies in Japan on a long-term view. And I mean like 5 to 10-year view. So the 2 key things about JPMorgan Japanese Investment Trust are, number 1, we take a long-term view. And number 2, we're based here on the ground in Tokyo. And when we come to analyze stocks, what we're really looking for is companies with great economics. So for example, how are their margins? How sustainable are they? Are they got a strong balance sheet? How's their free cash flow? How's the duration? So how do we see the competitive issues there? Because we've obviously seen some areas in Japan, Japanese companies, which were very strong and then have had their lunch eaten by companies elsewhere in the world. And how is the governance? So it's economics, duration, and governance. And when we do that, we give companies a rating. We rate companies premium or quality or trading. The key thing to know here is that in the market overall, we give the lowest rating to 75% of companies. But for the trust, we have 90% of stocks are in these top ratings that we have. So it looks completely different to the market. And we're really going to make sure we only have exposure to the very best companies that we can, which we think will be the winners in the long term. So it's what will win in the future, not what was Japan good at in the past.
Right. So for investors, when they invest in the trust, they're very much investing in your expertise and your process, and they're not getting something that looks like the market or like an ETF, are they? They're very much getting something that is much more unique and is targeting those companies that fit the bill in quite a specific way.
Exactly right. I mean, it looks completely different to what the market looks like overall. And we think, okay, in the short term, that can sometimes lead to some volatility in how we're doing. But in the long term, we think that is absolutely the right way to invest here. And our long-term track record is also, I think, very good and a reflection of that.
All right. Well, that's fantastic, Nicholas. Thanks very much for your time. Lots of food for thought there. I've learned a lot. I'm sure our clients that are watching and listening to this will have learned a lot, and much appreciated you making the time. You have had a very good performance, and your track record is very strong. So if JPMorgan Japanese Investment Trust isn't one that people have looked at in the past, I'm sure it'll be something they're going to look at probably straight after this video finishes. So thanks very much, and we'll talk again soon.
Yeah, appreciate it. Thanks so much.